What's up guys, it's Wiz. Welcome back to the channel. If you're new, I'm a Canadian investor. I cover a whole lot of information about investing in Canada and do research into our Canadian market. I dive into growth investing, dividend investing, and Canadian small cap / penny stocks. Today we'll be going over two undervalued Canadian dividend stocks. These TSX tickers have increased dividends annually for decades. For new investors, you need to join Wealthsimple Trade if you're looking to start investing and live in Canada. If you use my link in the description below to join Wealthsimple, you get $25 for free to begin investing. Consecutive 0.25% interest rates cuts by the Bank of Canada in recent months and the anticipation of further reductions is driving money back into oversold dividend stocks. Investors are wondering which TSX dividend stocks are still undervalued and good to buy for a self-directed tax-free savings account, your TFSA portfolio targeting passive income. And that is exactly what I'll be talking about today, which two stocks that have the potential of being those two wonder Canadian dividend stocks that you may be looking for. The first stock is TC Energy, ticker symbol TRP. Investors who bought the energy infrastructure stock last fall before sentiment on rates shifted from fear of more hikes to anticipation of 2024 cuts are already sitting on nice gains, but more upside should be on the way. TC Energy was as high as $74 back in 2022 before the Bank of Canada and the US Federal Reserve aggressively raised rates to get inflation under control. TC Energy completed its Coastal GasLink pipeline late last year after delays and soaring costs more than doubled the budget up to about $14.5 billion. Commercial operation is expected to start in 2025, so investors should see the 670-kilometer natural gas pipeline start generating steady revenue. The asset will deliver natural gas from Canadian producers to a new liquefied natural gas (LNG) export facility being built on the coast of British Columbia. Management has done a good job of monetizing non-core assets to reduce additional debt taken on to get the project finished. Coastal GasLink also successfully sold $7.15 billion in bonds to refinance loans. Looking ahead, TC Energy's ongoing capital program is expected to track at $6 billion to $7 billion per year over the medium term. As new assets go into service, the jump in cash flow should also support steady dividend growth. TC Energy raised the payout in each of the past 24 years, so they've been doing this for a long time. Investors who buy TRP stock at the current level can get a dividend yield of around 6.25% at the time of this video. The second stock is Fortis, ticker symbol FTS, is up about 12% in the past 6 months, and the drift higher should continue if the US Federal Reserve starts to cut interest rates as expected next month and through the end of the year. Fortis is trading near $60 at the time of this video. That's off the 12-month low of around $50, but still down from the $65 it reached in 2022. Fortis is a utility company, for those who don't know, with about $69 billion in assets located across Canada, the United States, and the Caribbean. The businesses get nearly 100% of their revenue from rate-regulated assets. This means cash flow tends to be predictable and reliable, which is good news for dividend investors who want steady and growing passive income from the dividend received from Fortis. Fortis grows by making acquisitions as well as investing in new developments. The current $25 billion capital program is expected to boost the rate base from $37 billion in 2023 to more than $49 billion in 2028. Additional projects under consideration could get added to this pipeline, and it wouldn't be a surprise to see Fortis do another deal in the next few years as borrowing costs decline. The existing capital plan is expected to generate enough cash flow growth to support planned annual dividend increases in the 4 to 6% range for 2028. Fortis has increased the dividend annually for the past 5 decades, which is unbelievable, and investors who buy Fortis stock at the current level can get a dividend yield of around 4%. The bottom line for these tickers is that TC Energy and Fortis pay attractive dividends that should continue to grow. If you have some cash to put to work in a TFSA focused on passive income, these stocks deserve to be on your radar or watch list. Make sure to always do your own due diligence before investing into any of the mentioned companies. Let me know in the comments if you have any questions, since I really want to expand my knowledge in the Canadian market, and you also expand your own knowledge by asking questions. It's a win-win situation. If you did enjoy this video, leaving a like really helps for the channel. Thanks for watching. I'll see you guys in the next video.